Today, I'm sitting down with Speculator Seth, the futures pro who treats the 10-year Treasury like a surgeon's scalpel. He cut his teeth at a prime broker, he trades the dome, and he believes his edge isn't in price. It's in predicting order flow. Today, we're unpacking Treasury auctions, Fed day flows, seasonality, and the exact indicators that he's built: a synthetic dollar index, inventory cost basis levels that catch intraday bounces to the tick, and more. If you want a real repeatable edge beyond just the chart patterns when it comes to treasuries, lock into this interview. Here is my conversation with Speculator Seth. I'm here with Spectacular Seth Ellis. Thank you so much for joining me today. It's a pleasure to have you here. First question is, how did you get the nickname Spectacular Seth?
Well, it's speculator, speculator, Seth.
I
So
don't know why I keep reading.
you know what though?
Let me start over then. Apparently, I'm having a dyslexia with you.
Well, no, it's actually it's a funny thing because that's actually common. That's pretty common. So
Really?
like
Okay.
the way this started actually was Futures IO was doing a journaling contest, which they do frequently, but they wanted to do one where you would keep a video journal, and I was basically like the only person that entered. And I thought at the time, "Okay, well, it's trading, so we'll make it Speculator Seth." And it is like a lot of people will read it as spectacular, or and it's too long to say. So I feel like from the perspective of like brand and marketing, maybe it wasn't the best choice, but
So that's
worked.
interesting.
That's the
I'm
way
not
it's
the
been.
first person to do that.
Yeah, no, you're not. Definitely not.
Spectacular sounds better.
I
I
know
mean,
if
clearly.
I ever go into something else, then maybe I can just use spectacular.
So why don't you tell us a little bit about how you got into trading?
Well, so I've always been a really big into just the computers and internet. So, when I went to school, I was working to make video games. And kind of a couple of things happened. Was first, I realized that working in the video game industry really really sucks. There's so many people that want to do it that companies can kind of don't have to treat you very well, essentially. And I was also very into politics at the time, and just everything that was going on the internet. So when the 2008 crisis happened, I immediately recognized that that was a big deal and said, well, to try and understand this better, I should start like trading and looking at the markets and understanding what's going on there. And essentially what happened was I realized that was way more entertaining and way more important and significant than all of the other things that I was looking at in politics and things like that. So I decided, instead of going into the gaming industry when I graduated, I would go and get a tech job at in the industry. So I found my way into one of the big prime brokers and did that for a few years. And then when I was done with that, I because you can't trade when when you work at companies like that.
Yes, I'm
They
aware.
have
I'm
very,
aware.
especially not futures, very, very strict rules. So then when I left, I picked up futures trading.
Interesting. And so in the futures industry, what markets did you first get into? Which particular markets were appealing to you?
Yeah, well, so there's actually an interesting story about this too. So the first thing was I've always kind of been interested in market depth and the DOM, just because it seemed like the most complicated and sophisticated and fastest paced thing. So I was always interested in that, and so I kind of got started with a lot of the learning from like Peter Davies and the jigsaw trading stuff. So I was kind of, and they do treasuries. So I knew that he did treasuries, and that was like what I wanted to learn. But when I worked at the bank, I had one time when I was visiting in New York, and I just happened to have an opportunity to talk to one of the block traders, and they were asking me like which things I was most interested in. And at the time, I was spending most of my time trading equity indexes like everybody else. And so I told them that, and they laughed. It was funny because that's what everybody wants to go into. And they told me, well, there's not necessarily anything wrong with that, but like that's what everybody wants to do, and it's actually they considered it to be the hardest thing. Like the guys on the desks that were trading equity indexes were doing something very, very different from all of the other traders, and they said that it was very, very hard for them to make money. So when I went off on my own, that kind of made me go, okay, yeah, I really should just focus on the treasuries, at least at first. And I thought that I would branch out to other instruments because when I worked at the bank, I would keep like a spreadsheet and I would do my own kind of swing trades and I would trade everything. But as I've gone along, I've found that with the treasuries, treasuries are the least risk and they're the most economically sensitive and they're the most active during the time that I want to trade. And so I've just kind of stuck with the 10-year treasury.
Interesting. Interesting. You don't hear a lot of people wanting to trade treasuries.
Yeah, yeah. Well,
Very complicated markets.
it's funny because I really think that as a retail trader, that's one of the best opportunities that are out there
Interesting.
because you know markets are very sensitive to all of the orders out there. So if you've got a group of traders and they see some sort of technical signal out there and they start trading on it, the market kind of catches on to that and it the result is it removes the signal from the market. So especially if you're day trading, like technical analysis has very limited use. And so as a retail trader and especially in futures, there's a lot more edge in understanding your market and knowing what's going on. And the problem is maybe you don't have that kind of knowledge, right? And that's where I think that the treasuries are really, really valuable because one, there's a lot more information out there about what's going on and is moving the treasury market, especially like economic data, inflation, what the Federal Reserve is saying, the like information that's public so that you can learn those things. Where versus if I want to get into the copper market, knowing what's going on that like this copper mine was shut down or had a disruption, like that's not news that I get on my feed. It's harder information to find, right?
Interesting.
And then on
So let me
on
just see if I get what
sure,
you're saying. You're saying that you feel in the treasury market that information is more publicly available. There's not like
exactly.
inside information or things that are just not in the public domain.
It's easier for a retail trader to build an informational edge in the treasury market compared
An
to
informational
most other
edge.
commodity markets. Yeah. And
Why
then on
why
top
do
of
you think
that,
that is?
uh, um well, just because most of these other commodity markets are much more esoteric things, like how the oil market works or how the copper market works. I think that like for instance, if you worked for an oil company, you know, then you probably would know a lot about it, and there would probably be a lot of things that you would know that could help you trading the oil market, right? But I
Right,
haven't done
right,
that, right? So I feel like
right.
it's easier to build that edge and that knowledge, and on top of that, that knowledge also that you learn in the treasuries because the treasuries is kind of like the origin of everything. Like everything is kind of moving it somewhat in relation to the treasuries, right? So that information that you get in the treasuries helps you in every other market if you decide to
Mm.
move on to other
Well, they
markets.
are the biggest market by far,
Yes,
monetary wise, the dollar amount that trades on any
exactly.
given day. That's interesting. I never really heard it put that way. So, you got into trading treasuries, and so, did you have a specific mentor, or that you did you
Oh
find a
yeah.
mentor at some point?
Well, so I think that the one that was the most my mentor, there's a guy named John Bottomley. I forget what the name that he would use on some of the forums. I think sometimes he would go by the name Top Gun Note, but he had a room that he was running, and we did a little exchange where I would do some programming for him in exchange for being in the room, and we built a ton of stuff together. Like, uh, he died in like 2021, 2022, something like that. And but it was really shocking to me because I can remember spending like all afternoon oftentimes like
Wow.
programming something and testing a strategy with him.
So he
But
would have he would have some like strategy ideas, and you would do the programming
yeah,
for him.
but the thing that was interesting about it, and this kind of comes back to like the informational edge sort of a thing, is so we were doing a lot of testing of technical strategies or things that we had found around the place, like strategies that were available to buy and things like that. But I often found that like the trades that he would take, and because he was making some good money on some of the trading, Eh, and I was always trying to figure out, okay, so how was he making those trades? And the his explanation for them often didn't make sense. It was like, well, it was there's this technical thing and this technical thing, and so I took this trade. And I was like, well, but yesterday you were focused on this, and this. But then whenever I was in the room, I would always notice, I would be thinking about doing something, and he would be like, "Well, no, you shouldn't do that because today's an auction day. Today's an auction day, and the treasuries tend to move up on an auction day, so you shouldn't go short." Or, here's this particular economic release is happening today, and this is what's in that economic release. So these are the things that people are going to be looking at. And I slowly
Sounds like
learned,
experience.
yeah, that it
His
was,
experience. How many years
yeah.
did he have before you met him?
Oh man, I don't. He's been doing it for a very, very, very long time.
Yeah,
It,
that's what
so
I'm
it, it
hearing.
it was
Wisdom,
just all of
experience,
those little
nuggets.
details about the treasury market, like how does a treasury auction work, and how do the banks hedge themselves for those, and things like that, that he knew that I've honestly never found anywhere online. He had just been around it long enough and had talked to enough other traders to get this information. And that was when I kind of started to catch on to the fact that like there's a limited use for technical analysis, and really what you want to
Mm,
do is you want to know more than everybody else about that particular product.
interesting. So no technical analysis for you, or limited.
Limited. So
S-
especially the technical analysis of price on day trading is, I mean, like people have been trying to find edges there for hundreds of years. Right?
Right,
The,
right.
the the edge that's available there is has pretty much been mined out. Now there is caveats to that, right? Like if you want to swing trade, a momentum portfolio is something that can work, right? And that is kind of like you're using moving averages and maybe rules like if we make a new 50-day high or something like that to trigger you into the trade. And the reason that that works is because you're getting in at the beginning of a move, and if you stay in, it can go like 100 times what your average loser is, right? On a day trading
Hmm.
basis, that doesn't work because it can't move far enough in a day for the math to all work out. So that's kind of like one caveat. It's kind of funny is if you look at it and you say, can I make money from looking at a 1 minute chart of a single asset on an intraday, meaning a day trading basis? And as far as I can tell, the answer is no. But if you change
Interesting.
any one of those things, then you come into a certain institutional strategy. Don't trade day
So
trade. Okay,
so
momentum portfolios. Look
wait,
at
let me
more than
interrupt
one
you something.
asset. Correlations, right? This
Quick question. So
sure.
you're not just talking about technical analysis of the interest rate treasury market. You're talking about all markets.
Yeah, really all
Mm,
markets. Um and I would say a lot of this is about price, right? So, um, one of the ways like again, you change any one thing about those things that like most retail traders are trying to do, and then you get into an institutional strategy. Well, one of them is don't just look at price, right? Bring in alternative data series. So order flow is one of them. Although the signals and the predictive things that happen in order flow tend to be very, very short-term based, right? But then there's all sorts of other data sets that you can pull in. Most of my indicator suite is actually about pulling other information from other sources and also displaying that on your chart, right?
Are they not technical? I mean, isn't order flow and volume and these other data sets, are they not considered technical? I mean, it's
Yeah.
data.
So yeah, and that's another kind of like pet peeve of mine is I don't really find the delineation between like fundamental and technical data necessarily very useful, right? There is data, and does that particular piece of data effectively predict the future about something?
Right,
Well,
right.
just intraday price data, as far as we can tell, doesn't. With the way the technical term that researchers use is their martingales. There's not any information embedded in the past price history that is at least effective at predicting the future price history. There's enough variance in there that it can fool a lot of people, and a lot of people think that they're building an edge. But once you gather enough data, you kind of find that in the end, on a risk adjusted basis, it's all kind of a wash, right? That doesn't mean that there's not like quantitative analysis, right? Like there's definitely robots out there doing analysis on things, but they're doing like a completely different sort of thing from what a retail trader is doing, right? Retail trader is like, okay, I see a head and shoulders pattern, versus an institutional strategy is like, I'm looking at this collection of instruments and calculating what this instrument should be based off of this one. And then when I find that one of the instruments is out of a line from all of the other ones, that might be an opportunity for me to do some arbitrage there, right? That's like one intraday institutional strategy, right? It's
Right.
quantitative.
Yeah.
So is
It's
that
quantitative.
is
Not
that
really fundamental per
technical?
se.
Is that technical or
Okay.
fundamental? It kind of doesn't matter in that case. But another way is like on the fundamental side is things like if all of the momentum traders are long right now, that affects the way that things react if there's a change, right? Is that really technical analysis per se? I mean, I think that if you say there's fundamental data and then everything else is technical, then by that definition, you would say that it's technical. But it's not really technical in the way
Yeah,
that most
I
people
guess we're
think
in the
about it, right?
semantics of what
Yeah,
technical means. We're really into that, which is an interesting conversation by itself.
yeah.
I think
But
I mean, from my perspective as a stock trader, I think when you look at fundamental analysis, so for example, if you
mhm,
look at revenues and earnings growth.
yeah,
So
yeah, yeah,
yesterday after it closed, Meta released their revenues and earnings, and they pretty much beat on everything. Things are going very well, yet very well there, but yet the stock's hammered today. So fundamental analysis is assuming that if certain that a stock will act or behave in a certain
sure,
way based on certain fundamental fundamental numbers like revenues and earnings.
right.
So and that's just not always the case. A Meta being a good
Yes,
example of that
definitely.
today, or you get a stock that misses numbers and the stock's up anyway. Um, so there's assumptions. Well, I guess that's true of technical analysis too, but
Well,
it tends
sure.
to be a little more measurable.
Well,
I guess it's interesting.
you're hitting
PE
on
ratio is another one.
you're hitting on something like a fundamental question about markets that I think a lot of people have, and a lot of researchers have been puzzled by for a very, very long time. That in the last 30 years or so, we actually have a really good answer, and it does kind of go back to this whole thing about like is the delineation between fundamentals and technicals, like there's this one view of the market and this other view of the market, and which one are you trading, or some hybrid of them. Whereas what I say is you have data, And is that data predictive? But
Right.
actually, what
Absolutely.
you want to predict is the orders, not the price. There's too much noise in the price to really get good information out. So what you want to look at is the orders. So when you looking at a piece of news like earnings, you have to think of it from the perspective of, okay, here's a piece of news that's going to change people's expectations about the futures and may cause them to submit new orders. What kind of orders are they going to submit? And if everybody was already in that stock expecting it to do well, and it did well, but not as well as they thought it was going to be, then the result is going to be selling. And the thing that is so curious about this is that some of the most influential forces in the market have absolutely nothing to do with what we would consider fundamentals. So, as an example, really the biggest force in the market today is index funds. Index funds, they are buying and selling stocks based on how many people contributed to their fund that month and how many people withdrew from their fund that month. And then
On a
they have
daily
rules
basis,
about
really.
like asset mix, that they have to, keep a certain asset mix, like they're trying to follow the S&P 500. So there's like monthly
Right. Balancing.
rebalancing. So rebalancing flows can be huge and can move the market significantly. Is that really, that's not anything that you're going to see on a chart, but that's not really fundamentals in the purest sense either, but it is a piece of data that you can use to predict future orders.
Hmm. Interesting. So yeah, I've always found it fascinating how these ETFs are able to manage their positions and that they're doing
Yes.
it on a daily basis based on flows for their ETF, which is it's kind of hard to wrap your head around how they're doing this, especially some of these ETFs that are totally based in options trading, like these leveraged ETFs. I honestly have no clue how they're able to manage those portfolios.
Oh man. Well, I can teach you about that too. Um, I don't know how deep. Actually, let's get into this a little bit.
Okay.
So let's say that you need to buy or sell a ton of something. Like my favorite example is when Elon Musk said he was going to sell 10% of Tesla. Right? Okay. You can't just sell 10% of Tesla all at once, right? The market can't handle it. So you have to like
Right.
split it up, execute it over time. So you might say we're going to execute it across 5 days. And then we want to determine on day one, we're executing this many orders. How much is it going to move the market, right? So I might go in and do some tests. I might trade like 10,000 shares or something like that. Or let's just say X shares, and it moves Y amount. Okay. So then if I come in tomorrow and I trade 2X shares, shouldn't it go 2Y amounts? And the answer is actually no. It moves 1.414 to whatever the square root of 2 is. So it actually follows the square root law, meaning that like as the size
But
of the
there's so many
order,
other factors in there too. I mean, what kind of
well,
orders are you doing?
sure,
How good's the
other
market
people
maker?
trading, but
Yeah,
you
the
can,
news of the
it's a
day
general rule
of the
though,
instrument.
and there's a lot of study about this, that the impact of a large order executed over time tends to follow a square root law. And what that looks like if you graph it is like it appears like the impact is linear at first, but then you find that there's kind of like an upper bound. Like there's a limit to how much it can impact it. Just like I was saying, like there's the market can only go so far in a day. So it's because like the liquidity can't handle it. And when you start running out of liquidity, it makes it hard for them to keep pushing. And this is actually an advantage for large institutions. It means that their impact on a per order basis is actually smaller than your impact. Or like another way of putting it is like you can have a situation where 1% of the volume can actually be responsible for 10% of the volatility. And this is what makes large funds like that even practical. There's actually a huge advantage to having to manage that much money.
Wow. I have a hard time wrapping my head around how that's possible, because to me it seems like if you really have to manage an extraordinary amount of money, let's say you're a mutual fund manager,
Yeah.
you're trying to make a smaller cap stock that doesn't have that many shares outstanding, like a gigantic part. Let's say you're trying to make it like 3 to 5% of your total portfolio. And you can't, obviously, you can't buy that all in one day, because if you did, you would move the market. If you just put in like a
For
giant
sure.
market order, you're going to move it up.
Oh yeah. I would say having worked at the bank, because part of what I did there was like the risk controls, and I could see basically every equities position for top prime broker, right? And often they would need to like increase the risk controls, and so I could know when they were making a big move. Like almost every institution out there that's going to be working in the stock market can move the market. It's actually not as hard to move the market as people think. It's
Right.
actually really scary. If you are a
But you're
successful
saying
trader
there's
and
a
you really
limited
size up,
amount
you will
that
move the
they can
market.
move it, but there's a
But
limited amount
there's a
that they can
limited
move it.
amount. There is a point
Hmm.
at which the volatility kind of goes up, and that's when like the market becomes completely unhinged. But you definitely, if you're executing a large
Yeah,
order,
I
you
mean,
definitely don't want to push it to that point, right?
so I think about like, I know we're a little all over the place here, but I think
No.
about
It's
1987. I think about 1987. The Dow dropped 22% in one
hmm
day.
yeah,
Now that can't happen because we have circuit breakers.
right.
And we don't really hit them very often. It's only happened a handful of times that we've had to make use of those circuit breakers. And I don't think they're a terrible idea, but there is a point where you can get panic, and people they're acting based on pure emotion instead of what's really going on. So I just find it interesting that
Yeah.
you're saying there's so much that can happen. I don't
Yeah,
know
there's
if I
like that.
totally agree with
Yeah.
that in a panic situation.
There's like the if you were to graph it out, at first it appears linear, and then there's kind of like an upper bound, but then if you really go too far out, then it spikes up like this.
Okay.
And
All
that's the
right.
kind of
Okay.
market that you're talking
Yeah.
about,
Yeah.
right?
Okay. Okay. I
But
just
but
wanted to make sure
yeah.
we were on the same page there.
Yeah. So these formulas are like if you work at a block trading desk, the way that this works is somebody will call you up and say, well, we want to buy X number of shares. And then what you'll do is you use these formulas and the square root law to determine how far that will move the market, and then quote them a price that includes that amount that they'll move and then a little bit so that you're making a profit. And it's
Right.
how a
Right.
block trading
Interesting.
firm works. So,
Hmm.
but it's really like once you understand that, it's really foundational. Like it explains so many of the confusing things that we see in the market, and really explains why trading is so hard. It's because everything matters. Even relatively small traders can move the market and have an impact on it. And
Interesting.
when everybody's doing that, it's just chaos. And
Right.
that's why it's like you can't really look at the past price to predict what's going to happen. You have to know what orders people are going to submit. And so that's why all my focus is on trying to predict what orders those people are going to submit rather than looking at a line on a chart that
So
is,
tell us
as
how
far
you
as we
do
can tell
that.
is
I
random.
mean, I'm very curious to know how you
Yeah.
determine what orders are going to come in, because it can be, it sounds like it can be a bit subjective, or I guess
Absolutely.
it's
For me,
something
it
you
is.
can,
Yeah.
okay.
I think that you go to the big banks and hedge funds and stuff, and they have models that they kind of combine together that can do this sort of stuff. And I don't really have the resources to do that. So for me, there's a lot of subjectivity involved. But what I am doing is I'm looking at an individual day, and I'm looking at a bunch of different things that I know about that day that could potentially predict orders. So I often start with the seasonality sorts of things. There's seasonality to the week, there's seasonality to the year. So October tends to be a time period where the seasonality isn't as good and there's more selling. It's been okay this year. There's tends to be more activity on Wednesdays than there are on Mondays. Mondays tend to be more quiet. I'm going to look at what news is there, because if there's going to be news, there might be some participants that will want to get ahead of that news, and there will be some participants that are going to wait until after that news to do their execution, right? And I'm also going to look at things like, okay, what time of the month is it? Because that's going to tell me about rebalancing flows, for instance, right? And then I'm going to get into the, okay, are there changes in people's expectations? So the economic number came out, changes the way that they think, or Jerome Powell speaking yesterday changed what they think is going to happen with interest rates. So they're submitting orders because of those things. And I'm taking each one of those things and I'm kind of saying, well, how many orders do I think can come out from that, right? And I'm adding them all together. And then if I have a situation where I think that there's a really big imbalance between those, and that there's going to be a lot more buying than selling in that day, that's then when I'm looking for a trade. And
Okay. And for your personal trading.
yeah,
And are you is there any way to build all of that subjectivity into like programmatically into an indicator?
I think that you definitely could. But it's a lot of work, first of all.
Hmm,
I think
interesting.
that it's gotten a little bit easier because some of the subjectivity is like, well, Donald Trump had a meeting with Xi yesterday, and it sounds like there's going to be a pause on the tariff war for a year, right? So
Yeah,
that's kind
pause.
of a subjective thing that happens every day. And how would you build that programmatically? But with LLMs and AI and stuff, maybe now you actually have a way to do that. So there's definitely ways to systematize it. And I would also say that, like when it comes to order flow in particular, that information is still useful. Like if I have a prediction that there's going to be a big imbalance that day, I should be able to see that in the order flow. And that allows me to take a position earlier than I normally would because I don't need as much of a signal in the order flow to say, yep, it's definitely happening, and then you can get in earlier, right? So that's what the problem with most trading that I see out there is they're waiting for some clear signal to happen and that says, oh, we're going to continue going up. And as soon as they get that clear signal that like the trend is up and they get in, the move is over, and then you're stuck in a position for 45 minutes and it doesn't go anywhere.
So tell us about your indicators, because it sounds like you're trading pretty subjectively, yet you've created some pretty
Yeah.
unique indicators. And
Well,
my guess is you're using both of them, both your
yeah.
subjectivity along with your indicators. So tell us
Yeah.
about your
And,
indicators.
and a lot of the indicators were things that I saw people using at the bank and like aren't built into the retail trading platform. So I think the best
Interesting.
example of that is the dollar index, especially if you're trading a commodity like oil or copper or whatever.
Gold.
How,
Yeah,
the value of the currency that you're trading affects things. How are
of
you trading
course.
without knowing what the value of your dollar is doing? So they always had the dollar index and were using that as part of their trading. Retail traders, you don't get access to that. So one of the indicators that I have takes all of the FX futures and calculates it with that data so that you can see generally what the dollar index is doing. And that's a really beneficial thing to have up that pretty much every trader can benefit from, right? And so a lot of those indicators are things along those lines. Recently, we've been doing stuff more with volatility. You can kind of look at what are the options pricing as the volatility and how far are they expecting things to go that day based on that number. That also seems to be able to predict orders really well, that when they get to those levels, there is pushback, you know
Interesting.
so it's additional information, right? I'm not just taking price and doing a further analysis on price. Pretty much every indicator that I have is
Right.
actually adding information to the chart, except for maybe the Kalman filter, which is another one where it's like Kalman filter is really common. I don't know why that's not built into the platform, but I made
So
one. Listen.
so these indicators, you offer these indicators. The dollar index one, for example, that you just mentioned,
Mhm.
has a special name, or you just call it the dollar index indicator?
I call it the synthetic dollar index. Yeah.
Okay.
So
So
I have a
when
website.
you offer
Oh, okay.
that, do you teach people how to use it, how to interpret it?
Yeah, so if you go to speculatorseth.com, You can go to the download section. You can download the indicators for free and try them for 2 weeks. Because I want to make sure that you find it
That's
useful
cool.
before you're
Awesome.
paying for it, right?
I'll
And
put
then
that
there's
link in the description.
documentation
So
there that gives very thorough explanations of what the indicators are actually doing. And then I've also made some videos on my channel. I have one big video that goes into every single one of them and what they do, but I've also made videos specifically, like there's a video about the dollar index, for instance.
you're talking about YouTube Speculator Seth.
Yes, exactly.
So go to that. Go check out his YouTube page for sure. So in those videos you explain the that indicator, how to use
Mhm.
it, how to interpret it.
Exactly.
Awesome. So
Exactly.
what else do you have? What other indicators?
Well, I think kind of like the crown jewel of my indicator package is something that we
Tell me.
call inventory cost basis.
Hmm.
So you can get like a VWAP, right? There's an average volume weighted average price of something, right? Well, in order flow, what you can do, because you know what the best bid and best offer is, you can look at all of the volume that's executed and determine, was the aggressor, or rather the market order, a buy order or a sell order? And so you can sign all of the volume by buy and sell, right? So from that, you could theoretically say, okay, what is that the VWAP of only the market buys, or the VWAP of only the market sells, or the other side of that, the limit order, right? And so what my model is saying is, it's looking at the perspective of the people that are taking fills and saying, if I was a market maker and I was responsible for every limit order that was out there, what would my average price be? And then if I'm trying to make a profit whenever I can on those orders, so I'm taking inventory on long, and then every chance that I have to take a profit, even if it's one tick from that long inventory, I'm going to take it, and I'm going to take it off, right? And how would that affect my position, and how much money will I have made? And so we get these lines that kind of tell you, here's what their average position is, and here's the point at which they would have to be losing money, where there's no way that any market maker could be making money in that situation. And when you take these best and worst case scenarios, it turns out that it actually gives you really seemingly prescient levels that the market responds very strongly to. Like the treasury market will bounce to the tick off of these almost every day.
Wow. Every day?
Yeah. Now you might not know which line it's going to bounce off of, because you don't know
Okay.
which
There's
which
multiple
guy is.
levels.
There's multiple levels, and you don't know if it's the buyer's level or the seller's level that's going to do it. But there are reactions to the tick every day. It's really quite crazy.
Are you
So
able to automate those trades even based on those levels?
well, yes, you can. So one of the things that my indicators do is because this is all based on level 2 and, or like market depth data and things like that, my indicators all cache what they're doing on the disk, so that you can pull it up historically, so that you can do back testing and build automated programs like that. For that particular indicator, the best use of it I have found as a target. Like if you've gotten a reversal, that gives you a really, really solid level for where it's going to go back to, and where you might want to think about taking it off, because there's a good chance of a bounce, or it start going sideways there.
Wow. Very interesting. And so you're exclusively using it on treasuries, but you feel it can work on other
I use
markets?
it on equity indexes as
Oh,
well.
okay.
But
Okay.
there's a lot of noise in
So like the
equity
NASDAQ,
indexes,
the
so
Dow.
it's not quite as accurate. But yeah.
Okay. Interesting. Uh, so tell me about like your clients, people who are using these indicators.
Mhm.
How do you see people? Are they mostly retail traders? Are they institutional traders?
Oh yeah, this
This is
is
going to sound
definitely
like a
retail
crazy
traders.
question. It's
Well,
retail traders
it's
trading real
Ninja
money
Trader.
or funded accounts. Have you? I'm sure you've heard of these.
Oh man,
It's like,
that's a good question. I'm not sure. So my audience, honestly, I hate the whole funded account thing. I I started out doing that, and I burned out on it very quickly. And
wow.
the reason I don't like it is because I feel that all of the funded accounts are essentially encouraging you to take on too much risk. They're
Mhm.
essentially asking you to double your account in a month or two. And if you just come in and say, like, what's a reasonable amount for me to make based on the size of my account and the volatility of the market, it's going to be way less.
Right.
Like, if you're making doubling the size of your account, because if you go to $3,000 and you blow the account, right, and then you're trying to make $3,000, or maybe it's more than that in some of them, right? So it is essentially trying to double your account. If you were a
Yeah.
hedge fund and you doubled your account every month, like, holy cow. Because most hedge funds, it's like if they make 20-30% a year, that's great. Now they have
Right.
problems, like there are
Very
problems
rare.
with size, right? So it's maybe not directly comparable, but still, like, doubling your account every month is a little bit crazy. And so if you just size things down, um, you will trade a lot better. The people that come to my live stream in the morning, we have a good group of 2 or 3 dozen people that come through, and these are people that have been there, like, from the beginning, that have been there 5-10 years. And
Wow.
when you look at, like 80-90% of people wash out before the first year, that's like really, really amazing. And I think that most of them are trading their own account, and they're trading their own account, and they're trading smaller. Like, even a 10-year treasury, one tick is $15. A good move or an average move might be $62, right? But you can trade micro treasury futures where an average size move is only $10, right? So if you fund an account with $1,000 and you just trade micro treasury futures, that can last you 40 years versus you go and you're spending, I see people spending the same amount or more on these combines and never really getting anywhere. So I would think that most of my viewers are funding their own accounts. But, there is this other kind of use case. Like, if you want to YOLO, right? Like, if you really want to take big risks and, you know, catch that really big one that goes, then I think that those kind of funded accounts kind of make sense then, right?
Yeah.
So,
But a lot of them actually limit your
mm,
ability to do that. Some of them are pretty cautious on how many different positions you can have. Like
mm,
they don't want it all in one. They want you to learn. They claim they want you to learn healthy rules that somebody who was
yeah.
trading their own money. But other ones, I mean, it's all about selling you the evaluation account on some level.
Yeah.
'Cause that's where
It's
they
one
make
of
their
those.
money.
Yeah. I mean, that's where I was kind of what got that thing from earlier is, like, if you look at all of the rules for your typical funded trader program, just look at each individual rule and say, I'm allowed to break that rule, you will find an institutional strategy that is profitable. Like the rules are set up to prevent you from using known effective strategies, essentially.
Yeah, and to keep you coming back and selling evaluation accounts. I mean,
Yeah.
I can
But
go into a whole
you can still
rant
have
about it.
strategies that they kind of work most of the time, and then all of the sudden will blow up, right? And that's the kind
Mhm.
of strategy that I think works really well for those funded trader programs, because if you blow up, you're not the one that's
Right,
blowing up. You still get all of the distributions that you've taken. So,
right. Gotcha, gotcha. So to you, what is the best thing about trading?
well, I think that for me, because I honestly, most people, they want to make money, right? Most people, they
That's why
want
we're
to
here.
live off of it, which I think is crazy, frankly. Like, if you want to trade for a living, go and work for a bank, which basically means that you've got to go to an Ivy League school and do really well and get hired right out of school. And for most of us, like, for me, I didn't realize that I really liked markets until it was too late for me to make that change, right? But if you really want to trade for a living, that is the place that you should go. But I still find trading really, really valuable because when you're on the front line, you understand how things work. And some of these kind of counterintuitive, strange properties of markets, like the square root law and why trading is so hard really teach you a lot about the way that the world works that will help you make better decisions. Like I've never made an insane amount of money from my futures trading, but I made an insane amount of money from buying my house. And I only knew to do that because I was watching the market at the time. And back in like 2013, people were saying, there's not going to be enough housing in the future. It's going to be really tight. And here is where the interest rates are going, so that I was able to get a lower interest rate. And I was able to make those decisions because of all of my experience from trading the treasuries, and that's hundreds of thousands of dollars, right?
Interesting. Yeah, that's interesting. What's the biggest loss you've ever taken?
Oh man. Well, so I think the one that stands out in my mind the most, and this was fairly early on, was I left my platform running overnight, and because I had a trade going, and it I can't remember the exact specifics, but basically what happened is it was supposed to exit a position, and it did, but then the limit and stop orders were still there. So after it exited a position, it got into a new position. It stopped into a new position and held that all night without any stops, stop or limits at that point, right? And so overnight, and this was on
how did that
treasuries.
happen?
Oh
Was
man,
it a technical glitch or something you fat fingered?
no, it was totally my fault because I
Okay.
didn't realize that those orders were still going to be active and still get touched, right? So what happened was it went over a handle, so like $1,000 loss, and then back to break even all overnight, and then just before I kind of got there, it lost 500, and when I got there, I took the loss. So that was
$500
probably,
is your biggest loss that
yeah.
you ever
So
took
I've
on
always
one trade.
traded very small. I'm trading micro treasury futures, right? But
Okay.
500 on CN is a lot. Like it often doesn't even move that far in a day. So that was a big one, and that's probably not like the biggest loss I've ever taken overall. Although I would say that when I've taken bigger losses, it was usually more like a series of trades, right? And
A series of trades.
even then, I don't think I've ever lost more than 1,500 in a day. So I really keep the risk
Wow.
small,
Okay.
and that's where I come
So
back
you're
to
kind of a micro trader. You're a micro
Oh,
trader.
for sure. Well, because
Okay.
again, I think most people, they want to size up to a certain amount so that they can make a living from it and all of that. And my approach is
Well,
I
I
want
mean,
to keep
it's
it as small as I can to limit the
right.
risk.
Okay. But still be in the game.
Yeah, sure. And I mean, from the perspective of day trading, is another kind of like misconception is that, you know, day trading historically was not intended to be like a real big risk taking strategy. Like people say, well, are you outperforming the index? Well, if you're day trading, almost certainly not. That was never the object of day trading. The object of day trading was to get a consistent amount every day, right? And so if you look at the way that like institutions day trade, they're often just taking the risk-free rate from their trading activities, right? And they just have a really, really huge wad. So for me, I'm not starting out with a huge account. So I'm trading amounts that are relative to that size.
Right.
And
And won't
so it
trigger
is
your
only a
fight or
few
flight
thousand.
response. I mean,
Oh,
that's
sure.
the
Yeah,
key is, I
and
mean,
that
the
definitely
emotional
helps too.
side is,
Yeah. Yeah.
yeah. So there's definitely an inverse relationship between how much you're putting at risk and how much you're triggering your fight or flight response,
Sure.
your emotions, and then
Yeah.
how well you trade.
Well, yes and no, because I mean, on the split side, I do have non-day trade stuff, right? Like I have a small stock portfolio, right? Like that's the thing is if all of the sudden I come into a windfall of a few $1,000s, I don't put it into my trading account. I put it into either my IRA or my Mad Money account, because you're going to make, if your objective is, what is the word, that if the objective is I want to make the most money, it doesn't make sense to day trade. It just doesn't. Day
What's the
trading
Mad Money
has
account?
its use. So a Mad Money account would be like you are holding 5 to 10 stocks and actively managing that portfolio. So you want to hold them for years, but you're still doing research every week, spending, maybe an hour or
Here's
two every week for each stock and researching them and changing things if anything happens with your fundamental thesis.
awesome. You are definitely an interesting person. You think about things
Sure.
more deeply, I think, than the average trader does, for sure.
Well,
Again,
just it comes from my background coming from, because I knew a lot more than the average person coming into it, right?
from the banks side.
Like when you really look at because I can look at like I have the tools to see the performance of all of the trades that I've ever taken, and I have periods that are just amazing, that like compared to a lot of people that I see on Reddit are better than a lot of the periods that people are kind of touting. But I also kind of understand that, well, like that's a factor of the market. I had this one good year or 2 good years. That doesn't necessarily mean you're going to make a ton of money this year. And so that's why I still keep the risk in line with, what my analysis and everything says is reasonable. I suppose that if I came into $1 million, then maybe I would size up. But
I mean,
I
haven't you
look
been
at the
curious
trading
about
as
trying to
more of
size
the
up?
experience. Yeah.
Have you have you
Oh
ever
yeah.
been ever?
Oh yeah. We'll size up. Although, like if I get too big, I do take the money out of the account. So I have done
Okay.
that before. So I don't.
Tell us again where people can find your indicators, because you said speculatorseth.com.
Yeah,
And
speculatorseth.com. Or my
okay,
YouTube channel. There's links
okay.
all over there.
Well, I really appreciate you spending some time with us today. There's a lot there to unpack. I mean, you and I could probably
Sure.
bullshit for a couple of hours about different topics. Uh, but I would encourage everybody watching this to go check out Seth's stuff, his indicators, his YouTube channel, and see what he's about. Seth, thank you so much for spending some time with us today. I do appreciate it.
Yeah, no problem. Thanks for having me.